Hey guys, this is part 2 of credit score and why you should care. Now, part 1, I'll link it up above me. If you haven't watched it, highly recommend it. It did go long, but it does go over all 5 parts of the credit score: payment history, amount owed, length of credit, types of credit, and new credit. Now, that first video, we went in depth on payment history and amount owed. Those, like I said, you can see in the video above. On this video, we're going to go over length of history, types of credit, and new credit, and how all 3 of those affect your credit score. Length of history is made up of 3 parts: how long you've had your accounts open, how long specific accounts have been open, and how long has it been since you opened up your newest account. Credit mix. You have basically 2 types of credit to max out this category. 10% of your credit score is based on credit mix. Credit cards or revolving credit is one type. And then you have installment loans as the second. Now, starting with installment loans, an installment loan is very simple. You buy a car, you buy a house, you pay every single month the same amount of money. That's an installment loan. Revolving credit, such as credit cards, the amount varies every single month based on how much you use that credit card. Now, credit cards are Visa, MasterCard, American Express, and Discover, as well as individual gas cards, such as an Exxon card or a Target store or a Lowe's, Home Depot, whatever branded store. If it doesn't have the Visa logo, it's a branded card. All right, new credit, the final category that we're going to discuss today. It is a broad category, but it only takes up or contributes 10% of your credit score. Now, new credit does take into account several things. When is the last credit card you got? When is the last loan you got? That determines new credit. If it's less than 24 months, it could be considered new credit. If it's less than 12 months, it definitely is considered new credit. So when did you get your last item? The second part of it is inquiries. When you go to the bank and you say, "Bank, I want a credit card," the banker goes, "Okay," and they run your credit report. That is called an inquiry. Now, inquiries stay on your credit report for 2 years. However, they only affect your credit score for the first 12 months. After that, they're still there, but they don't really affect your score. Heavy warning here. Warning! When you go to apply for a car note, you go to the local dealership. The dealership will farm out your credit report to everybody and their dog. You will see a long list of people that have pulled your credit report. If those companies are set up correctly and you go shopping for a car at one time, all of them will be compressed into one inquiry as far as the credit scores go. It will list a whole lot of them, but it will only affect you a minor amount, as long as when you're looking for a car, you do it all at one time within at most a 2-week time frame. So fair warning on that, you will get hammered with a lot of inquiries when you go shopping for a new car. When you apply for a credit card, such as my Navy Federal card here, Navy Federal is going to pull your credit report, and they're going to look specifically at inquiries. What they don't want to see is that you applied for a Navy Federal. You recently applied for an Amex. You recently applied for a Visa card. You recently applied for an Amex or a Chase Hilton card. They want to make sure that you're not piling up a lot of inquiries to get credit, because if you are, you look like a very high risk to them. It looks like this person's trying to get a lot of credit cards so that they can max them out because they're in debt. They don't know why. They were just going to assume the worst. They're not going to apply. So if you apply for a credit card, make sure not to do it more than once every 6 months is the best example. That will give you 2 cards a year, 4 cards every 2 years. Trust me, you don't need more than 4 cards every 2 years. Unless you're a churner, and then warning, again, warning, banks hate churners. That's somebody that goes, gets the card for the bonus points, and then stops using it. Gets another card for the bonus points, stops using. Gets another card for the bonus points, gets another card for the bonus points. They never use the card. They're just jacking up the bonus points. Banks don't like that. So they're going to limit how many cards. Chase 524 is the biggest example. If you have gotten 5 cards in the last 24 months, you can kiss your chances of a Chase card goodbye. However, I did bust that. I will explain in a future video. Again, like, subscribe. Guys, we've gone over the 5 different parts of the credit score. Payment history, 35% of your score is on payment history. You got to pay those bills on time. Easiest way to do, credit hack number 1, easiest way to pay your bills on time, go to your bank, set up an auto pay where it pays the minimum every single month. Second part of the credit score, amount owed. Keep your balances low. I cannot stress that enough. 30%, you never want to exceed 30% of your card. If you have a $1,000 card, you never want to exceed it reporting more than 30%. It's simple, just pay that bill before the statement date. Length of history. We can't control this except by not canceling old credit cards. If you've got a card that you've had for years, keep it. Mom, Dad, here's a credit hack number 2 just for you guys. If you got a good credit score, if you've got a card that you've had for a while, make your little junior an authorized user. Do not give them a copy of the card. Just add them as an authorized user on your card. Your history will become their history. When they get out of high school, do that around age 14. When they get out of high school, here's hack number 2. Get them a credit card. Put your account address. You are the one that's going to pay the bill. When they go off to college, get them a credit card. Here, Junior, here is a card just for you. You can spend up to $200, $400, $200,000, whatever. You can choose however much you want to give them. Son, here is a credit card. You are not to get any other credit cards. Do I make myself clear? If you do not get any other credit cards, I will pay your bill $200. Now, by doing this, by the time little Junior gets out of college, he is going to have an 800 plus credit score. He'll be able to write his own ticket. He'll go to the bank and he can buy a house with an 800 credit score. He will be sitting golden. Types of credit. Again, installment loans, revolving. You got to have them both. New credit. It's simple to master this last category. All you do is don't apply for new credit more than once every 6 months. If you're planning on buying a car next year, don't do it at all. Let your accounts age. Don't add any new ones, and you'll master the new account. In 1 year, it will become, you'll be getting 9%, I'm sure, of that 10% in that category. be aware, once you apply for a car, again, it's going to tank your score. Every time you apply for a credit card, your score is going to go down. To master the new credit category, all you have to do is not apply for new credit. Guys, this is going to conclude this video. The next video, we are going to go over my specific strategies, how I blew my own rules, what you can do not to blow them, and make sure to like, subscribe. See you next time. I'm out.